Dear friends, in this video, we will discuss UAE VAT and its key aspects. I hope you find the information helpful. If you enjoyed the video and found it useful, please don't forget to like, share, and subscribe for more content. Thank you for watching. In the next slide, we can discuss about GCC and Emirates in UAE. Gulf Cooperation Council, GCC. Established, 1981. Members, 6 countries in the GCC. 1 United Arab Emirates. 2 Saudi Arabia. 3 Qatar. 4 Oman. 5 Kuwait. 6 Bahrain. United Arab Emirates and its Emirates. The UAE consists of 7 Emirates. 1 Abu Dhabi. 2 Dubai. 3 Sharjah. 4 Ajman. 5 Al Quwain. 6 Ras Al Khaimah. 7 Fujairah. In the next slide, we can discuss about VAT in UAE. Value-added tax is a type of indirect tax applied to the sale of goods and services. It was introduced on January 1, 2018, with a standard rate of 5%. Input VAT is the tax that a business pays on its purchases, while output VAT is the tax that a business charges on its sales. The VAT payable by a business is calculated as the difference between the output tax and input tax. VAT equals output tax minus input tax. In the next slide, we can discuss about VAT registration in UAE. A business must register for VAT if its taxable supplies and imports exceed AED 375,000 per annum, which is considered mandatory registration. On the other hand, voluntary registration is available for businesses whose supplies and imports exceed AED 187,500 per annum, or if they anticipate exceeding this threshold within the next 30 days during the current financial year. In the next slide, we can discuss about VAT categories in UAE. VAT categories are divided into taxable and exempt supplies. Taxable supplies include standard-rated and zero-rated supplies. Standard-rated supplies are subject to VAT at the standard rate, while zero-rated supplies are taxed at a zero rate. Exempt supplies, however, are not subject to VAT at any rate. In the next slide, we can discuss about VAT rates in UAE. Standard-rated, 5% applies to most goods and services, such as electronics and clothing. Zero-rated, taxed at 0%, but input tax is recoverable on items like exports and international transport. Exempt, no VAT is charged, and input tax is not recoverable for services like certain financial transactions and residential property rentals. A business that provides zero-rated supplies does not collect output VAT, but it can still claim input VAT paid on related purchases. Once your registration application is successfully verified, the Federal Tax Authority of the UAE will issue a VAT number, allowing you to start charging VAT on applicable transactions. In the next slide, we can discuss about FTA in UAE. The Federal Tax Authority, FTA, is the government body responsible for managing and collecting federal taxes in the UAE. It oversees the filing of VAT returns, the collection of VAT, and the processing of VAT refunds. The FTA also provides guidelines, clarifications, and support to businesses on VAT-related matters. Additionally, the FTA conducts regular audits and inspections to ensure tax compliance. FTA website is www.tax.gov.ae. In the next slide, we can discuss about tax registration number in UAE. The tax registration number, TRN, is a unique number issued by the Federal Tax Authority to each person or business registered for VAT. This number acts as your official VAT identification for the FTA. The TRN in the UAE is a 15-digit number that ensures proper VAT tracking and compliance. In the next slide, we can discuss about zero-rated VAT goods and services in UAE. Zero-rated VAT goods and services include exports of goods and services, international transport of goods and passengers, certain means of transport like trains, trams, vessels, and airplanes, first sale or rent of residential buildings, Aircraft or vessels designated for rescue and assistance by air or sea. Certain investment in precious metals. Certain healthcare services and related goods and services. Certain educational services and related goods and services. In the next slide, we can discuss about list of exempted goods and services in UAE. Exempted goods and services in the UAE include financial services, services without an explicit fee, discount, or commission, such as issuing or transferring ownership of equity or debt securities, and life insurance and related reinsurance. However, financial services with explicit fees or commissions are taxable at 5%. Residential buildings, leases longer than 6 months or lease to UAE ID card holders are exempt. The building must be intended for long-term living and cannot include hotels, serviced apartments, or temporary accommodations. Bare land, land without any buildings or with only partially completed structures is exempt from VAT. Local passenger transport services within the UAE by land, water, or air, examples, buses, taxis, certain aircraft, are exempt from VAT, provided they are not for pleasure trips or classified as international transport. In the next slide, we can discuss about export of goods and services in UAE. The export of goods is considered a zero-rated supply for VAT purposes in the UAE, meaning that VAT is applied at a rate of 0% on goods exported to customers outside the UAE. Although no VAT is charged on the export, businesses can still reclaim input VAT on related costs. In the next slide, we can discuss about reverse charge mechanism in UAE. The reverse charge or self-accounting method is an accounting practice where businesses must account for VAT on certain purchases, even if they didn't directly pay VAT to the supplier or customs department. This is crucial for staying compliant with VAT regulations in the UAE. When does reverse charge apply? Import purchases. If you're importing goods into the UAE, you're responsible for accounting for VAT, even if the supplier doesn't charge it. The VAT is paid to customs and can be reclaimed, provided the business is VAT registered. Intra-GCC purchases. When purchasing goods or services from another GCC country, the reverse charge mechanism applies. The buyer in the UAE accounts for VAT at the standard rate, even if the supplier doesn't charge VAT. Designated zone purchases. For purchases from designated zones, special areas where certain goods are treated as outside the UAE, you'll need to self-account for VAT, even if the supplier doesn't charge VAT. Why it's important? This system ensures VAT is accounted for correctly in situations where VAT isn't explicitly charged. By understanding how a reverse charge works, businesses can ensure compliance and avoid any VAT-related issues. In the next slide, we can discuss about profit margin scheme in UAE. The profit margin scheme applies to second-hand goods, antiques, and collector's items. Under this scheme, VAT is charged only on the profit margin, the difference between the selling price and the purchase price, rather than the full sale price. This helps reduce the VAT burden on transactions involving items that have already been sold or used. Business purchased coins from Info Labs in Dubai for AED 15,000. The selling price of the coins, marginal value, is AED 5,000, inclusive of VAT. In the next slide, we can discuss about list of discounts in invoice. In the UAE, for VAT purposes, when a discount is applied to a transaction, VAT is calculated on the net payable amount after the discount is deducted from the base value of the invoice. This ensures that the VAT is calculated only on the actual amount the customer needs to pay, rather than the original invoice amount before the discount. For example, invoice base value, AED 10,000. Discount, AED 1,000. Net payable amount, AED 9,000. VAT, 5% of AED 9,000 equals AED 450. Thus, VAT is charged on the discounted amount, ensuring accurate VAT reporting and compliance. In the next slide, we can discuss about corporate tax in UAE. According to the UAE Ministry of Finance's January 2022 announcement, the UAE corporate tax will apply at a standard rate of 9%, segmented as follows. 0% for taxable income up to AED 375,000. 9% for taxable income exceeding AED 375,000. In the next slide, we can discuss about how to calculate corporate tax in UAE. ABC LLC, a trading business in Dubai, UAE, declared a net profit of AED 500,000 for the 2024 financial year. To determine the taxable income, ABC LLC applies a deduction of AED 25,000, as per allowable deductions, reducing the net income to AED 475,000. In line with UAE corporate tax regulations, an exempt amount of AED 375,000 is then subtracted from the net income, leaving a taxable income of AED 100,000. Corporate tax is applied to this taxable income at a rate of 9%, resulting in a tax liability of AED 9,000. This calculation reflects the current corporate tax framework in the UAE, which includes an exempt amount and allowable deductions to reduce the taxable base. Thank you for watching video. I need your likes and support for the videos. Please subscribe my YouTube channel for getting more videos in future.